and thank you for joining us. My name's Sam, and I work for the Growth Hub at SEMLEP, and I'm just going to do a quick little bit of housekeeping before I hand over. So just so that you are aware, we are recording the webinar today, and the plan will be for that to go out and be published on our website, so that you can access it at any time afterwards. So that should go out probably tomorrow. If you've got any queries over that, then you can always email me, and you'll have my email address a bit later on. And also, if you've got any questions during the session, we're obviously going to be running this as a bit of a panel type scenario. So if you've got any questions, we've got the chat facility for you to use, which I think we've already seen a few sort of hellos on there so far this morning, so you can see where that is. And if, as I say, if you've got any questions while the panel are speaking, then pop them in there, and then we'll pick them up perhaps as we go through, if we can, but if not, we'll try and come to them at the end of the panel. I do get a download of the chat at the end of the webinar, so anything that we don't get to or anything very specific, we'll be able to come back to you directly. So if you don't get an answer straight away, we will try and come to it during the session. But as I say, we can come back to you directly afterwards as well. So that is everything from me, housekeeping wise. So I'm going to hand over now to John.
Good morning. Thank you, Sam. And welcome to today's webinar titled Investment Masterclass, How to Grow Your Business Using Finance. I'm John Corbett, Regional Director for Barclays SME Banking across the Beds, Bucks, Northants and Cambridgeshire region. In addition, I'm also a private sector board member at the South East Midlands Local Enterprise Partnership and chair of the Strategic Oversight Board for Midlands Engine Investment Fund. As you can probably imagine from each of these roles, and particularly the day job, I know how difficult it's been over the last 6 months for business across the country, and of course specifically in our region across the South East Midlands. But I also know how important it is, perhaps more so than ever before, for business owners and managers to be really aware of what all the funding options are available to them. In addition, it's really important that they know what the wider business support is on hand to support them as they continue to take advantage of opportunities as and when they arise. And there are still opportunities that are presenting themselves, of course. So this is why I'm particularly delighted to introduce this webinar this time. Over the next hour or so, you're going to hear from an expert panelist or group of panelists who will talk through these options and whether that's loan funding or indeed equity investment. We'll also hear from business owners who've used both types of finances to grow their business, and they may well be business owners like yourselves. There are various views around funding packages, as you can perhaps appreciate, and some will say that loan funding is bad. Some will say that through equity investment, you can lose control of your business. So over the next hour or so, perhaps we can dispel some of those thoughts and myths and theories and concerns that you may have. But before we do find out more, we're going to have a quick word from our sponsors who've organised today's events. So I hope you find the webinar helpful, and I'll now pass you over to Emmanuel and Lewis.
Thank you, John. Good morning, everyone. I'm Emmanuel, Partnership Manager for SEMLEP, who, for you who don't know, it's a public and private organisation driving economic growth in the South East Midlands by investing in infrastructure, in skills, and by supporting businesses. So if you are a business based in Bedfordshire, Northamptonshire, and Milton Keynes, and you need information on, or guidance on any business issue, we have a team of business advisors who can help you on a one-to-one basis to discuss your business strategy, your marketing plan, how your business can be resilient, or where you can get funding from. We also have a program of workshops and webinars with the help of partners like this one, online resources, a local and national public and private sector partners network. And we also will be launching a peer network program with online session and one-to-one coaching in the next month or so. But if you are a business with 3 staff and a minimum of £200,000 turnover, you can also benefit from our Growth Curve program, which will help you set on track for attainable loan growth. So from this program, you will be able to identify your business goals, strategies, and opportunity with the help of one of a high growth business advisor. You will be able to attend a university course to develop skills needed to grow. And we're working closely with Cranfield University, the University of Bedfordshire, and Northampton University. Grant funding is also available and access to a peer network. So a very comprehensive program for what we call scale-up businesses. And on the panel today, we've got Paul and Sarah who benefited from that program and will be able to share their experiences with us. So that's what we offer here in a SEMLab Growth Hub. So I'm now going to pass you over Lewis, who's going to talk about the Midlands Engine Investment Fund. And thank you, Lewis, and over to you.
Thanks, Emmanuel, and good morning to everybody. My name's Lewis Stringer. I'm a senior manager in an organisation called the British Business Bank. The British Business Bank is government's economic development bank. And what we're responsible for is working with government and the financial community to identify gaps in terms of access to finance for small and medium-sized businesses. And that's what we do. One thing that we particularly recognise as an organisation is that access to finance, particularly for those SMEs, those small and medium-sized businesses, is easier when you're in the south, London, the southeast. But actually, once you move northwards out of London and the southeast, including the SEMLEP area, it becomes that little bit more difficult for a whole host of reasons. So one of our key objectives is to improve what we call the regional disparities in terms of accessing that finance. And one of the ways we do that, I'm pleased to say, is through a fund called the Midlands Engine Investment Fund. It's a collaboration between ourselves and a number of funders, most notably the 10 local enterprise partnerships in the West and East and South East Midlands. I'm going to steal John's thunder a little bit, because what John didn't say is, in his role as chair, is this afternoon he's doing an event which promotes and celebrates the 2 years of this fund. So with apologies to John, I'm going to quote some numbers that have been kept secret up until now. But just to let you know that as of the end of August, the fund itself had made over 400 investments in over 300 businesses across the Midlands, with investment through the fund itself of over £81 million. And actually, when you'll hear a little bit about from some of the fund managers, you can actually double or treble that amount in terms of the actual amount of money that's gone into those businesses as well. And I'm particularly delighted, because of today's webinar, to let you know that SEMLEP area is getting its fair share. In fact, don't tell everybody else. The SEMLEP area is a great place to work. And I think that will come through from the fund managers on the panels. So again, without doing the maths and getting my calculator out, you'll see that the SEMLEP area is getting more than its fair share in terms of support through the fund. And actually, in terms of the LEP area's own contribution to the fund, it's more than getting paid and more so. Thank you, Sam. Next stage. So I'm not going to talk too much about the Midlands Engine Investment Fund, because what you'll actually have is all of the fund managers on the panels over the next hour or so. But this diagrammatic just gives you an indication of where the fund and the fund managers fit in. And what we do as an organisation, and what the fund is all about, is supporting those businesses that would otherwise struggle to get commercial funding from the likes of Barclays and other organisations as well. Thank you, Sam. So without further ado, I'm going to move on to the first panel. And I'm delighted to present this panel, compare it, because of the panelists that are on here. So in a minute, hopefully the slide's going to go off and you'll see all 6 panelists, maybe myself, on the screen. And I'm going to ask each of the panelists to kindly introduce themselves. So in no particular order, but starting with Sarah. Sarah, would you just like to very briefly for 1 minute say who you are, what you do, and your business, please?
Thanks, Lewis. Good morning, everyone. So my name is Sarah Davis, and I'm a skills and education technology entrepreneur. I am founder and CEO of Skills for STEM Limited. Skills for STEM transforms STEM education by delivering personalised, adaptive learning programmes which dovetail into current employment and unleash the untapped potential in all our candidates. We do this by providing construction, engineering and project management specific qualifications, primarily at the higher levels, so HNC, HND through to Masters, and we also provide higher level apprenticeships.
Thank you, Sarah. If I come to you, Jacqueline, just to briefly talk about your role within the Growth Hub.
Yes, good morning, everybody. I'm Jacqueline Day, and I'm one of the high growth business advisors with SEMLEP, the South East Enterprise Partnership. So as a high growth business advisor, I'm working on the Growth Curve programme, which Sarah has actually entered onto as well. So we meet with businesses, we listen to what their aspirations are, we look at where they are in their business right now and help them to get to where they really need to be in their business in order for them to grow. So initially we have a 3-hour diagnostic with the business so that we can really go in depth into where their business is now and what their potential is for scalability into the future. And then we also put them onto the university programmes where they can develop their skills even further. Thank you.
Thank you, Jacqueline. So rather than get the panellists to introduce themselves, what I'll do is probably just go straight into the Q&A panel. If I can ask the individuals to introduce themselves. So Mark, because I can see you on the panel, can you introduce yourself and talk a little bit about what you do as an organisation, please?
Yes, of course. Good morning, everybody, and thank you, Lewis. I work for a company called Fortis Accountants and Business Advisors. It's a new accounting firm launched on April Fool's Day in the middle of a pandemic. And last week we opened our 12th office in York. The headquarters are in Northampton, so right in the heart of SEMLEP area. And we offer a full range of accounting and advisory services, but I head up the corporate finance team, which specialises in helping businesses to raise debt, raise investment, help them with acquisitions and mergers, and we also support owners with succession options and their businesses. I've worked in corporate and advisory work for a number of years, and very much enjoy working with owner managers, and delighted to be here this morning.
Thank you, Mark. Before I move on to the other panellists, Sarah, can I just quickly come back to you, if you don't mind? I'm particularly interested to know that as a business, what were the particular challenges, either from a finance point of view or from a growth point of view, that you experienced over the last few years?
So we're 7 years old, or we will be in the coming few months. The challenges that we mostly experienced were, we started with zero money. My background was, setting networks up and business development, but we had no capital to speak of, and it was little old me working from home on my own. And I think the biggest challenge was that in my head, I was this enormous company on day one, and of course I wasn't. And so then it's trying to convince everybody around you that actually they should invest in you. At that stage, obviously it was debt investment we were looking for. And they didn't know me. They didn't know what I was capable of. They didn't know that, today I'd be sitting here with 25 members of staff, turning over, our last accounts of 1.4 million, So at that stage, I had, zero order book, no staff, but I knew I was going to be a big business. The biggest challenge was convincing people. And, I know we'll talk later about the gender issues too, but, I did feel that I was discriminated, against for being a female entrepreneur as well. And, just getting taken seriously was the biggest challenge we found. I can remember in those early days, and I was talking to my husband last night, trying to think back about the things that made our journey maybe quite interesting to anyone that might be listening. And I can remember fighting with Lloyds Bank to get a £7,000 overdraft, and I got to the point where I think probably they gave me that £7,000 overdraft because I probably became so irritating to them that they actually wanted to get rid of me. And, you know, I'd come, my last employed job before I started Skills for STEM was, at the time, was for a company called Osram, big lighting manufacturer. You know, my background is building services engineering, and I worked in that field for a very long time at quite a high level. And I knew how to write a business plan. You know, I was corporately trained, and I knew how to go and present at a high level. And the guys on the telephone at Lloyds Bank couldn't read my business plan. And, you know, I spent hours with them on the telephone trying to show them, you know, what each cell meant on the spreadsheet, and how they might interpret that to show that I knew my figures, and that we were going to make, you know, money, and I'd managed to mitigate my risk. So I think that the challenge for us regarding investment was, in those early days, we had nothing. You know, we literally had nothing. I had, you know, no way of bringing an income in for myself, you know, and paying the mortgage. But more importantly, it was the challenge of convincing people that that they should invest in us. And at that stage, it was a punt. And I think, you know, we have other challenges now as we scale. But, you know, at that early stage, debt investment was right for us. We're a service-led business, and we still are. It's very difficult, I think, at that stage to think of any other solution other than, you know, for our model, debt investment. And it was trying to find the right solution for us that was affordable, but that enabled us to get moving. So we always wanted to be a large organisation. We always wanted to employ people. But actually, you do need capital, and the fun and the pain and the long hours and all of that comes in those early days, you know, builds that resilience.
That's really useful, Sarah. So I'm writing down some notes here. So the first aims and objectives relate to persistence and irritation. Now, most of my bosses will say that I have that in abundance. But if we can park that, and I'll come back to you because you've raised a number of other points there, that'd be great. Can I come back to Jacqueline a little bit? Jacqueline, you run the Growth Curve programme. You have a number of businesses that, like Sarah's, have got growth aspirations.
Yeah.
As John said right from the outset, a lot of those businesses will be worried about taking on loan funding and taking on debt. And I know the world's changed over the last 6 months. Do you come across that, and how do you try to change that perception of external finance as a risk as opposed to an opportunity?
Yeah, and I think Sarah's story is a really good example. When I met Sarah, she was obviously a lady with great aspirations and knew exactly where she wanted to go in her business and how she wanted to get there. I think she also realised that she actually did need that debt finance and that loan finance to be able to help her. And I think cash flow is such a concern for many, many businesses. And we've all heard of the phrase that cash is king, but actually cash flow is king. And you need to be able to get into your business that cash flow right for your business. And debt, people are concerned about taking that debt on sometimes. Absolutely they are. But I think if they view debt, if you take debt on, as long as it's good debt, it is good for the business, because it can be seen as an actual investment into the business then. So if it's seen as making an investment into the business to enable you to get to where you want to achieve your aspirations, then without it, you're going to take a lot longer to get to where you want to get to. So I think those are the challenges that we do come across with businesses sometimes, that there is that fear. But once they get over that fear and they realise that they need that help, and it's like a support, and it's an investment rather than a burden, because the only thing you have to really, your only obligation is to meet those payments, those agreed payments in the business. And as long as you can demonstrate that, you know, you've considered such as the paying habits of your customers, for instance, so that they pay you well and they pay you early, so the cash flow is demonstrated, and it's demonstrating your ability to pay on time, which is obviously critical as you need a positive cash flow situation. And that extra debt and borrowing and loaning finance can certainly help that cash flow. So what I would say to businesses is look at where you are in the life cycle of your business. As your business grows and it matures, and maybe you've been operating for a while and just can't get onto that next step, that next ladder of growth. And actually, that's where the finance does help. It actually enables your business to grow.
Thank you, Jacqueline. That's really helpful guidance. And again, for every business, I'd always advocate taking advice and guidance from trusted advisors at every opportunity. Sarah, very quickly, I want to come back to you. You touched on particular issues you face as a female entrepreneur. We've talked about this, and there'll be opportunities over the next couple of weeks to look at that a little bit more. But can you just very, very briefly, if possible, just talk about those before we move on the discussion?
Yes, I mean, I think, so some of the challenges that we experienced, I think, were because, you know, there was some unconscious bias going on with regards to, you know, trying to convince the people that were looking to fund us, you know, that we were viable. And I think that in that early stage, you know, there's a vulnerability about anybody that's prepared to invest in a new organisation. And as we got larger, you know, we wanted to raise more capital. So we've had quite an interesting journey. We had an NWest startup loan 6 months after we started, which, you know, was just for £8,000. We then were very excited having paid that back 2 years later. You know, we then were able to benefit from the overdraft. And then after that, we took, you know, various small funding circle loans and we paid them back one by one. But I think, you know, I was constantly pitching for much larger chunks of money. Again, you know, the debt finance offers. And I had rejection after rejection. And it felt like, you know, that I was trying to convince these people that I was credible and viable. You know, I did find that very, very difficult. And I did come across some very odd conversations that related to, you know, what my husband did for a living. You know, where were my children? You know, how was I going to balance, you know, my full-time role with childcare, which nobody should be asked, male or female. And actually, it was quite rude. And so you become very acutely aware that, you know, that actually the gender does play into some of this dynamic. And, you know, I'd go to meetings and, you know, certainly, you know, be around a table and the expectation was that, you know, that I wasn't the business owner, which was a complete joke, you know. And I think even now, you know, hopefully we've proved to many organisations that we do what we said we'd do, you know, and that we are capable of scaling. You know, we've proved it, you know, our company's house records prove that. But I still find myself being underestimated all the time. You know, we are a very ambitious organisation that's making change. And I feel that quite often that I'm seen as a female entrepreneur who probably doesn't know what she's talking about, you know, and I think that my gender plays into that. So I am very acutely aware of that side of things. And I suppose it actually spurs me on. You know, as I've got a bit older and a bit wiser, like we all do, you know, I see my difference as an asset. And, you know, the way I move forward myself is that I recognise that. And I try and mitigate that in conversations. I try and preempt the challenges that might be going through people's minds, even if it's not obvious. And try and make sure that they realise that I am serious, and various things along the way that clearly, you know, show that. I think for us, our biggest transition of growth was back in 2017 when the government Department for Education reformed the apprenticeship model. And I said to my team, I want that contract. And they looked at me as if I had two heads. And I said, that is our way forward. You know, we're doing great with privately funded programs, but to get the growth and provide the depth of learning, I want to be in the apprenticeship market. We had a plan, you know, that was to apply for that contract. It was that we would apply first time and not get it, apply second time having learned from the first time, and then third time we'd be on a winner. we applied first time and won it.
Okay, thank you, Sarah. Apologies, I'm conscious that we've got other panelists, and we will have an opportunity over the next couple of weeks to talk a little bit about the particular barriers faced by female entrepreneurs amongst other groups. Very quickly, Sarah, and it can be a yes or no answer. We often get the feedback from businesses when they're applying for funding. It's a real test. It's like taking an exam and you don't know what the answer is until you find out if you passed or failed. What's been your experience, particularly in terms of the Midlands Engine Investment Fund, of applying for finance and being successful?
So with the Midlands Investment Fund, it was a very positive experience with us. So we worked with Stefan over at First Enterprise, which, to be honest, was the key to our success with the funding round. So you just don't know what the rules are. You know, nobody tells you. They give you a document, they expect you to understand it. You know, I was trained formally, you know, in a corporate organisation previously, and the words, they just didn't transpose into what was required from me from what was written down. So what I found was that finding a really good organisation, in our instance, it was First Enterprise, and Stefan there as the advisor, you know, he led me by the hand. You know, he said, this is what this means. This is what we're expecting to see in this box. You know, I put my first draft in. He said, right, that's shocking. Get rid of it. You know, this is what they're asking. And we were able to, with his support, give the answers, which we already had, but in a form, in a way that meant that they were interpreted appropriately. And with his support, we were able to gain that, obviously, debt investment for the media fund.
As if by magic, thank you for teeing that one up, Sarah. I'm going to come to you, Victoria, if you don't mind. Can you briefly just introduce yourself, let us know about First Enterprise, and I'm particularly keen to know businesses that are approaching you, what are the particular issues they often will come with, and how do you try to address some of those issues when they're looking for funding?
Of course. So, good morning all. I'm Victoria Coatstate. I'm the Operations Manager at First Enterprise Enterprise Loans. We're a not-for-profit organisation that operates throughout the East and South East Midlands, delivering funding through the Midlands Engine, start-up loans and a number of other government-backed schemes, including CBILS. Our funds start at as little as £3,000, if I can get my words out, and go up to as much as £250,000. And we help those businesses, very much like Sarah, that are struggling to find their way through the funding nightmare of mainstream lending. And we have the luxury of being able to work with businesses, handhold them through the process to apply and get the funding that they need to make those first sales, to prove their business, to prove their marketplace, and actually get their first foot onto the ladder so that they can go off and secure funding from elsewhere, from mainstream lenders or even equity investment. Through this last 6 months, the landscape of lending has changed considerably. And what we're seeing now at the moment is businesses are having to diversify to be able to survive. So they're coming to us because their funds are severely depleted, and what they need to do is, to survive, they need to diversify, put new things in place to enable them to survive the next 6, 12 and into the future, because this thing's around for the foreseeable. So what we have the luxury of being able to do is to work with the businesses, get to really know the model, understand them, and be able to get them the finance that they need to make those first few sales and get these changes underway.
Thanks, Victoria. That's really helpful of you, and a good backing and recommendation from Sarah there for the fund as well. I'm going to come on to Graham. Graham, if you can just possibly introduce yourself briefly, talk about your organisation, probably talk a little bit about where the fund fits typically, and again, just give us a bit of an indication of what you found working in the South East Midlands area and talking to businesses over the last couple of years. Thank you. Thanks,
Lewis. Yeah, I'm Graham Ball. I've been an investment manager at Maven Capital Partners since May 2018. I'm Buckingham based, so I'm an ideal location for SEMLEP and MEIF Focus. I've done 40 years in the finance world for Bank, Business Link and my own business, so I'm sort of well versed with what SMEs and businesses are faced at the moment. My employees, Maven Capital Partners, look after private equity and venture capitals, trusts, management buyout funds, but they also run regional funds like the MEIF, which is why I'm here today. And my MEI brief is really secured B2B loans to established profitable businesses in the range of 100,000 to £1.5 million, both for normal growth and now CBILS as well. But ostensibly we are a gap funder where first tier bank lender won't or can't support in full or even partially, and we come in and sort of fit that in. In terms of my experience, I'm getting plenty of flow at the moment in terms of inquiries and stuff, so that's good. It shows if you put yourself out there, you keep in contact with professionals and direct businesses, they'll come back to you. It's trying to help them make an application a good one. So giving them that steer, just as Stefan did at First Enterprise, and sometimes looking at the draft side of things. And it is simply, you know, completing it correctly and returning it in a timely fashion. You know, there are no information or numerical gaps, so those gaps are explained and mitigated. The financial forecast is sense checked, and no hockey stick. We know what the hockey stick looks like in terms of incredible growth. They need to be realistic. And the business plan that accompanies it doesn't need to be war and peace. And we'd like some important information on the management team, because it's their qualities and track record. They are the leaders. They will make that growth happen at the end of the day. So it's working with businesses to turn their application into something that can go through the fund and give them the growth that they need.
Thank you, Graham. That's really helpful. And I'll just very quickly come back to you. Sarah mentioned something around how important it was for her to work almost alongside the funder to prepare the application, the business plan. If you had one piece of advice for a potential applicant, just one, what would it be to prepare themselves?
Is that to me? Sorry, I missed that.
It was to Graham, but again, if you can, Victoria, if you want to give us one very briefly, one piece of advice. For us,
actually, the best piece of advice is in the application process, or as you're starting to think about applying, make sure you get your finances in order. The amount of time people come to us without accounts prepared or without some management accounts, and then, as Graham said earlier, hockey stick cash flow forecasts that are showing rapid growth. So put some time and effort into actually preparing your current accounts, making sure that they're up to date and you've got some strong management figures, and then be pessimistic with the cash flow forecast. Don't be overly optimistic.
Thanks, Victoria. Graham, I promised to come back to you. Your one piece of advice?
Yeah, it's really, when you send something to us, ensure that words and figures don't differ. And a quick example of that is if you're asking for a £125,000 loan, your cash flow shouldn't show peak borrowing of 150,000, because effectively that's in excess of the request. So that's immediately something you would look at. And likewise, cash headroom is great, but don't go asking for a 250,000 loan where your peak debt is 125,000. That will sort of raise questions in the way you look at it. So just get those words and figures the same.
Thanks, Graham. That's useful. Before I come on to David, if you don't mind, just to make people aware that the acronym CBILS is being used by a couple of people. Just to make those people that aren't aware, CBILS is just a government guarantee for lending, which a number of funders, including the main high street lenders, actually use. So if you're a little bit confused by the phrase CBILS, it's just a government guarantee. And if you've got a question on that, then if you want to put it into the Q&A, please do that. We've got some interesting Q&A, which hopefully we'll be able to cover off a little bit later. I'm going to come quickly to David and then Mark. David, if you can also explain very quickly who you are, what the fund is. I'm very conscious you're a relatively new funder, but you've got some exciting news, which I don't think we can announce, about a potential first investment in the SEMLEP area.
Thanks, Lewis. Morning, everyone. I'm David Price, work for the FSE group. We're a gap funder. Our East Midlands fund was set up at the beginning of this year. I joined the company in March. We are loan-only funders, ranging from 100,000 to 1.5 million. Maximum term 5 years. We look at businesses where there is a realistic growth story. There's a lot of due diligence involved in looking at the type of businesses that approach us. There's a long list of what businesses would be eligible and wouldn't be eligible. So we're well versed in that. We're very quick at, if it's not eligible, we can tell the potential customer very quickly that it wouldn't be for us. And if it is eligible, we take it on board. And a lot of the things that were mentioned by Graham would be familiar with me and our fund. There's a lot of hand-holding. The process from getting an initial application to getting it to our credit committee is very forensic, and some of the questions that Sarah was raising earlier, getting a realistic application to the credit committee and then getting credit approval. It's all a question of getting the right information in at the right time. And again, what Graham was saying, similar issues, having integrated cash flow and P&L projections. I mean, my advice would be get your accountant to prepare realistic and readable projections that everyone understands. It's all a question of having a good growth story. Most of the businesses that approach us are pre-profit, but there's got to be a credible growth story. So the customer's got to convince us, and then we have to convince our credit committee. The specific issues, I mean, COVID obviously has affected us. We were set up at the beginning of the year, so we parallel with coming in with the COVID crisis. I think getting realistic projections is the key issue, not being over optimistic with certainly cash flow and P&L projections, and getting creditable management accounts, up-to-date management accounts is key. Sorry about that.
Thank you, David. That's really helpful. We're going to come on to an accountant, although he sometimes masquerades as a business advisor and accountant in a bit. But you raised some interesting points in terms of COVID. I'm conscious that the new fund and yourself have basically tried to operate during COVID-19 times. John very kindly did quite rightly say that unfortunately it's hard times, but there's great opportunities here. If I can come back to Sarah a little bit, as a business trading through COVID-19, the pandemic, what's been your experience, very briefly, Sarah, in terms of how COVID-19 has affected your business either positively or negatively?
So I think we've all been affected by COVID in numerous ways. I mean, I think for us, it was an opportunity to try and take control of our destiny and look at ways that we could offer different products, maybe greater flexibility in some of what we're providing. We found that the B2B training was very quiet for a few months, based on the priority of employers was obviously not training at that point, trying to get people into lockdown. So we focused on our B2C portfolio. We built a brand new product with the support of Pearson Education called FlexiLearn, and it enabled us to not only provide that, excuse me, during obviously lockdown, but also now this will be a permanent product in our portfolio. This product enables people to do construction and engineering HNCs and HNDs 1 unit at a time, so that they can pay per unit. They have a 5-year period in which to complete that program, but it just gives them much greater financial and time flexibility. And so for us, it was an opportunity for us to say, this is yet another jump along the road. We just need to look at innovative ways to overcome the challenge and move forward. So for us, you know, it has been tough. Quite a few of our students on programme have been made redundant, and that obviously puts pressure on us too to help them. But out of this, we've been able to build a broader portfolio, which hopefully going forward will make us even more flexible, no matter what comes next.
That's great. Thank you, Sarah. That's really helpful. And again, there are opportunities out there. We realise it's difficult times, and it's probably as important to look to fund that. Mark, best till last, I guess, because Graham and David have been talking all about the need to get your finances right, to get your business plan right. So tell us a little bit about how you can do that.
Yeah, thank you, Lewis. One of the things we often see is we encounter some extremely enthusiastic entrepreneurs, and very often they have an array of visions and plans. And one of the things we try to help all of our clients do is to bring some focus and order to those plans. It's quite important to concentrate on the areas which are going to drive the business forward most effectively. And so we try and help people understand what they're trying to achieve and why they're trying to do it. And then we help them model what that is going to cost in financial terms. And the end of the story is then how does that provide a payback which makes the investment worthwhile? Because we've all come across very enthusiastic entrepreneurs who invent fabulous products that nobody wants to buy, but the thrill of the invention is what drives them forward. But we try and focus them on the commercial reality of it. So a lot of what we do is to try and help ground the entrepreneurs into some financial reality and help encourage them to take an interest in the financial aspects of the business as well as just the commercial aspects. And that's very hard for somebody who's a free spirit and massively more talented than poor accountants and advisors could ever be. But at the same time, by working in tandem, we can be a very effective team. So we try and encourage them to be prepared for challenge, commit their ideas to paper and model them financially. And that often helps shape the thinking, sometimes to change the plans. Sometimes it helps them to expand or develop more of what they want to do. But touching on the point that Graham made, what it does finally show is what the borrowing requirement for a business should be, or its investment requirement. And we help get those words and figures to match up so that effectively the plan of an entrepreneur, which is the genius at the center of the plan, is we can help shape it, model it, present it properly, and then hopefully go and get them to get the money that they're looking for. We also would encourage people to not be over optimistic, because it's very hard not to be. You need that positivity to actually step forward. And I think when I give one piece of advice to any entrepreneur is just to expect everything they plan to do to take longer and expect it all to cost more than they thought it would.
That's good advice as always, Mark. Some do's and don'ts. Good practice, bad practice. What makes a good application for funding in your experience?
Yeah, I mean, one of the key things is it's very easy to forget that a funder will want to check through your figures and your books. And so a very important do is to make sure that your accounts are robust and that they will stand up to a due diligence exercise, because if they've been thrown together hastily or there are too many sort of assumptions in the figures you produce, when they're checked and they fall apart, the whole transaction falls apart. We also want you to make sure that the structure of your business is right. You know, if you've got a load of mates down the pub who've got shares in the business and you're about to go into a new expansion phase, it might be the time to tidy it up before you go into the next round. And also then just make sure that you've got your ideas properly constructed and thought through so that you can resist the challenge which you're going to get. The don'ts, I think they're quite important, is don't forget that you're stepping into a market that quite often may have other players that may be much more powerful than you. And so don't overlook the fact that competition can impact what you're looking to do. And be aware that you're dealing with people who are naturally cautious. So you do need to be persuasive in the way you approach things.
Thank you, Mark. That's excellent advice. Before I come back to Sarah for some final comments around her business, taking her business forward, I've had a quick check at the Q&A, and thank you so much for all the questions you put into the chat box as well. One of the key things that I seem to be seeing a lot of is around that initial startup funding, and probably, apologies Victoria, I'm probably going to come in your direction a little bit, because again we've got a number of people on the call talking about that all in difficult getting that first bit of funding some advice and guidance, because as an organisation you'll see loads of those businesses, I'm guessing.
Yeah, so the startup loans is one of the best kept secrets in the marketplace, and that is normally our first port of call for any business. Now, Midlands Engine will allow us to do pre-start and startup businesses as well. It just depends on the level of finance they need, and often we match or blend lending anyway to get the businesses up to the level of finance that they need. Again, what this does with the funds, once you secure the funds, either the Midlands Engine or startup loans, which we will help the client through the process, that allows the businesses to have funds that might be able to then attract the grants from the LEPs. Often with the grants, they're only about 20 to 30% funded, and often they have to have match to go with that. And once it's approved by the LEP, they have to go off and buy the equipment or the machinery, whatever it is that the grant was approved for, and then claim it back from the LEP. So actually coming down the route of startup loans or the Midlands Engine for the pre-start stage, you can secure, probably depending on the size of the business, you could secure as much as £150,000 for even a startup business, and that is what we've done with organisations like Sarah, and in SEMLEP area there's multiple examples of where we funded up to 150,000 at a pre-start stage. And it allows them to prove the market and access the grants and other things that are out there.
And in terms of finding out about those grants, because that's a question that's come through a little bit, again, not just saying that, I'm guessing the Growth Hub and the Growth Hub website is the best first point of call?
Absolutely, and Jackie and Emmanuel at the Growth Hub there are fabulous at helping businesses navigate through the grants and support available. So definitely tap into your Growth Hub.
Before we do come on to Sarah, just for her final comments, if again you're not necessarily looking at loan funding, this panel's been very much focused on loan funding. The next one at 11 o'clock we'll be talking about equity finance, and we'll also have an angel investor there. So again, I'm conscious that for a lot of startup businesses, maybe loan funding isn't, for various reasons, the most appropriate, but we're having a subsequent panel at 11 o'clock whereby we'll talk about the other options for a startup business around angel and other equity investors as well. So again, please hang on and wait for that session at 11 o'clock. Sarah, I'm going to give you the final words if you don't mind. What's the plan going forwards? And probably more importantly, you've been successful in securing funding. Will that growth, hopefully, in the business require additional funding?
Thanks, Lewis. Yes, so the future is exciting. So we are setting up a private university, and we're very excited about that pathway and journey. So setting up the awarding body status to get there obviously takes time and money. We've nearly paid off our £50,000 Midlands investment loan. We've just secured last month £250,000 of debt through the bank. And we're presently working with an absolutely superb corporate finance advisor to raise some equity finance this time. We're working already with a preferred organisation with a hope of securing that in the future to get us to that next stage. And I think that the bit for me really is that debt finance has been a stepping stone. You know, up until this point, it was appropriate for debt finance. For us, it was about not giving away the business too much too soon, but also we needed to go through some pain to feel what it's like to make us control our finances better. So our next part of the journey, as I say, we've got £250,000 of debt finance that came from the bank last month to get us now to a really comfortable position to secure some equity finance to give us the time to get the right deal with the organisation that we want to properly partner with. And for me, debt finance has been a fairly short-term solution to get us there. And, you know, I'm very grateful for that.
That's brilliant. And it's a great journey and a great example of a journey that you've taken and how funding's played an important part of that journey, Sarah. So one of the things that I would like to leave the session on is that actually, when you are developing a business plan, actually include a funding plan as part of that and think about the different types of funding that would be most appropriate, because in a short period of time, Sarah has gone from a startup business to a business with significant turnover, employing people, and she's done that through a series of funding options. So again, it's important right from the outset that you're aware of those options and use them as and when they're most appropriate, taking the advice and guidance that Sarah's clearly done over the last few years. I'm going to close then. We've got some excellent questions, which hopefully the fellow panelists are answering. And similarly, there's a couple of questions that are probably more appropriate for the next panel. So we're going to put you on pause for a couple of minutes whilst you can have a tea or coffee break, powder your nose, as my grandmother used to call it. But we are going to start the next session at 11 o'clock, where we've got an equally excellent set of panelists that are going to talk about the other options to loan funding around equity finance. So I'd just like to say thank you so much to all the panelists that have taken part in the last panel. And please make your tea, make your coffee, have something to eat. And if you can come back to us by 11 o'clock for the next panel, that would be excellent. Thank you very much. Thank you, everybody. If you are able to stay on and answer any questions in the Q&A and chat, that would be excellent. We will be collecting those and forwarding on to people. We'll make sure that's the case. And similarly, if there's any specific comments you want to make, we'll try to incorporate that into a final email as well. But thank you very much for all of your inputs. You're more than welcome to remain for the second session. But again, if we can ask you to switch off your video, if you can do for us. Thank you very much.
Thank you.
Hi, Sam. How are you doing?
All okay, Lewis? Ready when you are.
Have we got everybody for the panel?
Yes.
Lewis.
Gordon, Simon, Regina, Stephen, Jordan. Yeah.
Do you want to go straight into the slide and then I'll do the voiceover? Good morning, everybody, and welcome back. Hopefully, for those that joined the earlier session, you've had the chance to have a drink and just take time away from the screen. I'm delighted to introduce the second panel for this morning. My name is Lewis Stringer. I'm a senior manager at the British Business Bank. In the earlier session, we talked a little bit about loan funding and how it was useful to support businesses, right from a startup position, but all the way through to in Sarah Davis's case, quite an established business with turnover and employing staff and making the next stage of their growth. What we're going to talk about for the next 30, 35, 40 minutes or so is some alternative funding to loan funding, and that's equity investments. And I'm delighted to introduce an excellent expert panel of businesses, advisors, funders, who are going to be able to talk us through the benefits of equity funding. What I'd like to do, if you don't mind, and I'll probably learn from my earlier mistake, is I can ask each of the 6 panelists to very briefly, in 1 minute or less, just to introduce themselves in the first instance before we start the conversation. So I'm going to go in the order they're on the slide. So I'm going to start with you, Paul, if that's okay. Could you introduce yourself?
Hi everyone, hopefully you can hear me. My name's Paul Andrews. I'm the director, owner or co-owner of various media and tech companies. I've been doing this for around 20 years, and prior to that, I spent about 15 years in international blue chip companies in various roles. One example of a company that I still do run is a games console company, which in the last 2 years did about $30 million of turnover from a very small team. So I do hopefully know what I'm talking about. I tend to describe myself as a bit of a part catalyst or part alchemist, and I'm a bit of a Marmite character. That's also how I do actually raise funds. So that's what I do. I also work with various things like SEMLAB and local schools, and I try to inspire younger entrepreneurs and just kids and students to actually go out there and do stuff, because that's the only way you will ever achieve anything. The mantra I always use is, if you sit on the settee, you will get nothing. If you get up off the settee and try something, you might succeed. It's all in your hands. So that's what I am.
Thank you, Paul. And Gordon, if you could just possibly, very briefly, 1 minute, just introduce yourself.
Thank you, Lewis. My name's Gordon Spark. I'm with the growth of one of the high growth business advisors, working with the scale up businesses. Yeah, my background is very much in the pharmaceutical industry, life sciences and professional services, working at senior management level. Spent a lot of time also recently in consultancy and coaching, and I've just suddenly thought to myself, actually, I remember many years ago being inspired to work in consultancy by a guy called Sir John Harvey Jones, the previous chairman of ICI. He had a really fantastic television program, and I think it was in the 80s. And he went around business, got under the skin of the businesses. And I think it's fascinating to spend time with business owners to get an understanding of their ambitions and sort of help them sort of through some of the challenges. And so that's what I currently do at the moment.
Thank you, Gordon. Name dropper. Where did he end up, I wonder? Simon, if you could, morning, Simon, if you could just introduce yourself, please.
Morning, Lewis. Thank you. Yeah, Simon Arkle. I'm a partner at EMW Law. We're a well-known law firm in the area. We've been in Northamptonshire and Buckinghamshire now for about 25 years, a little bit more than that. My day job is I'm a corporate lawyer. I've been working in the area for about 15 years myself. And we cover all the usual bases in terms of what you'd expect from a law firm that's dedicated to advising businesses. But the team I sit in really is one that is dedicated to sort of corporate transactions. So I spend a lot of my day job and have done over for a long time now, advising management teams and companies on their investment documents.
Thank you, Simon. That's really helpful. Georgina, morning. Could you introduce yourself?
Morning. Yes. I probably sit on both sides of the table today. On one hand, I co-run a legal tech startup based in Milton Keynes. And on the other hand, I now involved in the management of MKIG, which is a local angel network, which was set up by Alexander Boswell, who some of you may know. And it's been going for around 4 years, and we've seen some good companies come through that and get investment. With my startup hat on, we've raised in excess of around 2 million for our own businesses, including grant funding, so sort of Innovate UK type funding. And we're actually in a fundraise at the moment, so we are actually really in the thick of it and engrossed totally in this topic at the moment. We've been quite lucky so far. We've managed to raise 300k in the last week, and that was actually from a lot of the investors in the MKIG network, which is really positive to see that there is still an appetite to invest during the pandemic.
Thanks, Georgina. That's a really helpful summary. I think we're going to probably come back to you during the panel just to talk about that valley of death and how you actually start up and get that first tranche of monies. But before we do that, Stephen, can you introduce yourself, please?
I can. Morning all. My name's Stephen Windsor. I'm an investor, a venture capital investor at Mercia. Very much a man of the region, so grew up here, went to school and university here, and I've spent the last 10 years supporting and investing in businesses of a range of different sizes and different sectors and different shapes, and latterly ended up at Mercia, which is backing ambitious SMEs, merry band of founders with a great vision to go out and change the world. My job is to principally to find those great businesses in the South Midlands and to bring both capital and scale-up experience to the table. Mercia as a venture firm has some 800 million of funds under management across 400 regional companies. So there's a lot of learnings there about the growing pains required to build and scale a business. So we really focus on bringing both of those things to the table to support fantastic SME businesses. Thank you, Lewis.
Thanks, Stephen. And last but not least, Jordan, could you introduce yourself? Good morning.
Absolutely. Good morning, everyone. My name is Jordan Lavender, and I work for a fund called Foresight Group. Foresight Group is a private equity fund, national investor, and we have about £650 million of private equity cash under management that we're investing in growing SMEs, and we've done that for the best part of the last 30 years. I've been with Foresight 2 years, and I focus a lot of my time on the Midlands Engine Investment Fund, for which Foresight manages a £35 million pot that we've been investing in the East Midlands predominantly, Midlands overall, for the last 2 years or over 2 years now. And we've successfully made 17 investments from that fund into early stage businesses located in the East Midlands. And I guess one of the things that I do is spend my time working with management teams and business owners to achieve those ambitions that they have. Thank you.
Thank you, Jordan. If we can come off screen and go straight to the panel. Paul, if you don't mind, I'm going to come to you first as one of the two businesses, small businesses in the panel this morning. Can you just give us a little bit of background, very briefly, in terms of Zyke or any of the other businesses? I'm particularly interested to know about your journey and how you set off and how you've used finance to support the growth of your business.
Okay, Zyke, just to give a quick background, the name Zyke comes from an electric bike, which was originally invented by Sir Clive Sinclair. And I was actually in business with Sir Clive. If you don't know Sir Clive, he did the ZX Spectrum computers back in the 80s, and then lots of electric things. So the idea behind Zyke is it's an electric company, a power company, all stuff green related. It's obviously fairly new, but we have some interest. We've got some early contracts, and we're doing a combination of like Me Too businesses to give us bread and butter income, as well as some long-term different projects, which we're looking for patterns for as well. So, as I say, I've been doing this for a long time now, working in blue chips originally, and I got to the point where one day I thought, why am I working to earn lots of shareholders, lots of money, but I'm actually not getting any of it myself? So at that point, that's where I moved into actually running my own companies, which have had varying degrees of success. Some have been successful and some have just not really worked. But again, that's a big trial and error. I don't really like the word entrepreneur, but the reality is an entrepreneur keeps trying to get it right, hopefully. So perhaps that's what I do. So that's what I do in general. And I'm slightly different to many businesses in that many businesses, they build up, they do equity funding with the intention of actually then having an exit. Whereas I tend to be more about steady, slower growth, market share, and remaining in the company to a point where perhaps they hand it over or sell parts on. So I'm fractionally different to things that you might normally see perhaps on Crowdcube and stuff like that, where they would literally be looking to build it very quickly and sell it on. So that's slightly more different. And the other thing I tend to do is I tend to work in partnerships where I can. So to encourage people to invest, to try and become partners with them. So if we were doing an installation, for sake of argument, we would look to actually partner with the company and share the profit. So again, slightly different approach. We're not looking to just say, here's an invoice, here's a quote, we do the job, we walk away. We look for long-term partnerships in the things we do. And a good example of that is the games company where we've done the games console. We didn't have £20 million to invest in the production of a games console, but the larger distribution company did. Therefore, we done a profit share deal where everyone benefits. They actually were quite secure because they actually physically hold stock globally. So it's very hard for them to lose the money. And it's just a question of how quickly we sell the stock. But that's another example of where we try and think a little bit outside the box, do things slightly differently. So, a bit of a background.
Thank you, Paul. That's really useful. I'm going to come back to you a little bit, if you don't mind, a bit later on about your experiences working with investors and in your case as partners. Before I do that, and before I come to Gordon, can you talk a little bit about your experiences of the Growth Curve programme and what you've learned from that and how it's important in terms of growing your businesses?
Yeah, definitely. Growth Curve's been useful. We've initially used it with Zyke to help some of the junior members of the team. So people who they have good commercial experience in terms of the work, but they've not had any experience of perhaps running companies or growing them and building them in that context. So that's been really useful. And one of the fellow directors in Zyke has been working via Gordon and Bedfordshire University to just get more an insight, more sharing with peers. And it's just this background that will speed up the process. But yes, I could perhaps teach it to them, or it would take time we don't really have in this particular instance. It's been really useful.
Thank you, Paul. That's useful. Gordon, I'm going to come to you very quickly. For those people that weren't in the morning session, can you just let us know, give us an oversight of what the Growth Curve programme is? And I'm also then interested to know a little bit about how you work with businesses that are showing that growth dynamic around finance options and putting them in touch with the right people.
Yeah, thank you, Lewis. I won't repeat what Jacqueline covered this morning in the first session. The Growth Curve programme, which is a fully funded programme for businesses with the ability and the capability to grow, has been running for about 12 months now. The two key benefits really that need to be highlighted are our grants available, which is always an interesting prospect for businesses scaling up, either for the investment in their capital equipment or for perhaps investment in marketing, developing new websites. So those grants are available to those businesses that have got an ambition and ability to scale. But the other key benefit, which I think excites me even more, is the opportunity to take part in the leadership masterclasses that we've developed with the universities of Cranfield, Northampton and Bedfordshire. I mean, one of the key things about startup businesses or sort of early stage businesses or even scale up businesses is that they seldom take time out for the business to invest in themselves, or some time out to perhaps work on the business rather than in the business. And these leadership programs have really challenged their thinking, got them to think about their strategy and how they can sort of develop a plan to take the business forward. and they've been universally well received by those that have attended them over the last 12 months. And the added benefit is also the link up with a network of other equally ambitious business owners and can share best practice and even do business with each other. Going back to your specific question about funding, yes, clearly, obviously, the Growth Hub is a gateway to provide link to businesses to where they can tap into funding. So yes, I've had the ability to point businesses in the direction of the fund managers that have been presenting this morning, and that's obviously one of the key things that the Growth Hub can do, is to have access and be aware of the opportunities that they're out there to be able to take advantages of some of the Midlands Engine Investment Fund programs.
Thanks, Gordon. We heard this morning from John in his welcome that, you know, with loan funding, debt's seen as a bad thing, but also in terms of equity, a lot of entrepreneurs, founders, managers, owners of businesses will see equity as dangerous because they're going to lose control of their baby. Do you come across that a little bit when you talk to those types of businesses?
Yeah, quite frequently that is usually the concern business owners have. And yes, that obviously if they're looking for equity investment, it's often at a stage when, you know, traditional loan funding may not be accessible to them because they don't have the track record or the security. But if they approach it in the right way and recognise that, yeah, they may be losing some of the control, but if they're choosing the right partner, they will be bringing some really strong expertise into the business that can actually help the business move forward more rapidly as well. So yeah, there is a little bit about losing control, but with the right equity partner, that, as I say, can bring vast experience to the business to help in the growth of that business.
Thanks, Gordon. I'm going to come back to you again, Paul, as I promised to. You mentioned that your investors are partners in many ways. So clearly you've overcome that fear of losing control of the business. Why is it good to have an investor? Why is it good to have a partner in your business?
It's good. It's good to have buy-in, definitely. I've been down this road before in the sense that, yes, I do have a fear of losing control because in the past, I won't go into details, obviously, we've had investors who promised funds, taken control and basically damaged the business, and let alone didn't always come up with the funds. So tip of the day is cash up front, please. That's one thing. But that aside, generally, if you can find a partner, as long as they're not going to literally take over, because that's the whole point of the businesses that we run, that we tend to be different, be unique. That's what's going to make us hopefully succeed. As long as they don't stifle that and they work with you and can see that what you're doing is right. I'm more than happy to always take advice, more than always happy to take criticism. But the whole point is, to a point in everything we do, they're investing in the people and the company, you know, and often I am the people, the one that leads it. So yes, I am always wary, but I am happy to work with people because it is the way forward ultimately, and partnerships are critical.
Okay. From a positive perspective, how can those investors and partners really deliver the growth that you're aiming for? What do they add? What value do they add to the business?
Yeah, again, in that type of thing, partners would tend to be people who can add value, not just money. So they could be introductions, it could be contracts, it could be technical ability. So again, it's not just random people. The obvious answer, you know, teaching everyone to suck eggs, is pick your targets wisely, whatever you do. You know, there's no point, you know, being in something that's in the wrong industry or the wrong contact. You need to have someone who you have faith will help you grow it. You know, passive investment is fine if that's all you want, if you want money, but active investment is more appropriate if you do want to have a fast growth and contacts often.
Thank you, Paul. That's really great insight. I'm going to come to you, Georgina, if it's okay next. Before we go into your businesses, which is very interesting, can you just let us know a little bit about what Milton Keynes Investors Group is and what business angels are? Because I'm conscious that not everybody will know what a business angel or high net worth individual is.
Yeah, sure. So the group is an angel network. It's predominantly with high net worth individuals from the local Milton Keynes area. There's around 300 people in the network now. I'd say around 80 to 100 of which are classed as high net worth individuals. The rest of the people in the group are either people with access to high net worth, such as accountants, lawyers, bankers, or local stakeholders like SEMLEP, universities, people like that. So we usually have, well, pre-COVID, we would have had quarterly pitch events where, say, 2 to 3 startups would pitch to the room, and typically they would generally get something from the evening. COVID's obviously put a stop to that. So we are now we're actually arranging our first virtual event for the end of November. So it'll just be like this really, but with a pitch to the investors. It's completely free for startups to pitch. There's no pitch fees, no success fees. It's completely free for investors to be members. So it's just a way to encourage early stage investments in high growth startups in the local area.
Thank you for that. We've had quite a lot of Q&A over the first session and this one from people who are very much at that early stage, probably doing their first round of funding. Dare I say, typically that's where a lot of angel activity is, in that earlier stage, riskier end. As a business person that's gone through that pain, what's your advice to people in terms of that first all-important chunk of money and the advice you take, and dare I say it, how you pay for that advice?
So, well, as I said, we're fundraising at the minute actually, but I suppose it's quite different for us now. When we did our very first fundraise, talking sort of 6-7 years ago now, for our first business, it was a very different landscape at the time. We were new to the whole situation, so we didn't really know what the deal was. And we sought advice not from anyone in a professional sense, sort of as a financial advisor or anyone like that, but we spoke to lawyers, accountants, and we spoke to a lot of other startups who were going through the same process. And I often think the best way to learn is actually from other startups, because they know what's happening at the time. So the experience then, we wasted a lot of time actually, because I think we fell into the trap that most startups fall into, in thinking that you have to be in London to raise investment. So we did that, we tried speaking to venture capital firms, and we got nowhere. It was just total waste of time. In London, you're competing against thousands of other startups, and just getting time with investors is just almost impossible. Really good ideas get lost in London. So we changed tactic, and we decided to have more of a local view of it. And we again spoke to local accountants, lawyers, and eventually we got introduced to the right people. And then actually we closed around in a relatively short space of time. But it was a huge learning curve. We went, a long time being self-funded. And yeah, there wasn't much support at the time. There's more support now, which is...
So I'm going to ask you a couple of questions there then. What would you, in hindsight, you've gone through the process, what would you do differently now? And you've talked about the advice and guidance. Give the people in the audience a better understanding of who to approach, when to approach them, and typically how you do that, because it's a bit of a black art, isn't it? It's who you know still. Yeah, it is. It is who you know.
And that is why we do encourage startups to make meetings with as many accountants, as many law firms as you can in the local area, because who knows people with money? Their advisors. So if you can impress their accountant and you qualify for tax relief, then it's in the accountant's interest to sort of push you in the investor's direction as well. So it's just a good way of building your local network and finding out who's looking for startup investments. And they also give really good advice, and the investors themselves give good advice. A lot of angel investors are just high net worth individuals who have done really well in their careers. They tend to be older, retired, and they have a wealth of experience that they're quite happy to share. And guide you as well if you want that. Okay, and without promoting anybody, because I can't do that, talk to me a little bit about how you hope MK Investors Group goes forward, and what support the actual group itself can provide
somebody coming to pitch money?
So if you're coming to pitch money, I mean, the website, which I can share the details of, sets out quite clearly what you need to have in your pitch deck. So it's a 10-minute pitch deck. You've got to be able to present it. We do expect startups to be at that stage where they are confident in asking for money and they know what they're going to be doing with that money. But we can help sort of help with your pitch in a way, you know, help refine it. But we do expect startups to already be at a decent stage. But I would say to get to that stage, you've got good initiatives now like the NatWest Hub, which unfortunately is all remote now, but organisations like that which can help guide you from very, very early stage up to being investment ready. Okay,
that's really helpful, Georgina. I may come back to you with your own business experiences when we've had a chance to speak to some of the VCs in the room. Stephen, I'm going to come to you next, if you don't mind. I'm conscious that you are relatively new in post, although some great news in terms of an investment you've led on this morning in the STEMLEP area, which hopefully you can touch on a little bit. Can you talk a little bit about some of the concerns and issues that you regularly come across when businesses are approaching you around equity finance and how you work with them to overcome them?
Yeah, sure. There's probably two parts to that. The first one is when entrepreneurs approach us for investment, and I see in the commentary that Ashley's kind of raised a similar question where there tends to be a little bit of confusion about where the most appropriate sources are to raise money. And what we tend to find with high net worth or venture investors is that investing in early stage companies is a high risk game. You know, the loss ratios are very high. So what investors tend to do are focus on specific fields where they can leverage their experience, their people, their portfolio to really A, understand the proposition, but B, to also add value to that company beyond just the capital. So I encourage, like Sebastian, you know, to find the right home. You know, investors take equity in the business. They're there for the long term. You want to find that right fit. So often we get businesses coming through that are, say, B2C focused, and we as an investment house tend to not do B2C investments. It's a very specialist and high capital field, so we tend to steer clear of that. So it's an easy answer to give, but it's a little bit frustrating because, you know, the entrepreneurs are trying to navigate that. The second part to it is, and it's the natural crux of what we do, is, you know, putting together sensible deal structures to support that company. And what we tend to find is there's often mismatches between valuation expectations of entrepreneurs and VCs, and that's often a teething point. You know, put in appropriate deal structures for those companies. And you know, the company that's been in the media today, you know, they wanted, you know, valuations. I've seen startups go out, spend a lot of time trying to optimize for the valuation and not get anywhere. And 18 months down the line, we pick up the conversation without much progress, get the deal done, and then they move on. So, you know, I encourage, yes, valuation is really important, but I'd encourage you to look beyond that to your investor, to your potential investor. Find the right fit of somebody that can get that capital in and drive value very quickly.
And thank you for that, Stephen. And you know, don't be immodest. Humley Holdings, talk to us a little bit about that investment and why it was something that Mercia and yourselves wanted to invest in. What made that particular proposal good?
Yeah, sure. So there's three things I look for in an investment. The first and foremost is the management team and the founders of that business. Ultimately, when you break it down at an early stage company, you're going to have to ask yourself, what is it you're buying into? And ultimately, it's the people. There won't be very many customers there. There may be no customers there. The product will be really early stage, maybe largely unproven. So what you're really backing is the people in that business, and you know what makes that team uniquely qualified to solve the problem that they're bringing to the table. You know, we look across our portfolio, and often the business plans that we backed on day one look nothing like what the business has grown into, and that's because the quality of those teams have been able to pivot, turn, shape, adapt to customer feedback and to build their proposition through iteration. So first and foremost, people are the key to everything, and Humley was no different. Really strong team, great depth and experience in the technical field that they're doing, and you know, a real driven motivation to scale a business over a quick period of time. So that's the big part for us. The second is market, and really this is just a qualification metric. Is the market big enough to support venture returns? When we look at venture, we have a lot of, naturally, a lot of companies that don't make it. So the ones that do make it have to make it at a scale to provide the returns for our own investors. So that leads us to how big is this market? And if the market is really niche and really small, it could be a fantastic idea, but it's never going to grow or scale into a significant business that makes an exciting exit for venture. So it's really, are we in or out based upon the market size? And then finally, it's product. And this is where there's a bit of inverse in terms of entrepreneurs and venture. You know, entrepreneurs love talking about product. We love product, but they often lead with product in those conversations rather than team. So, you know, what is that product? What is the problem you're solving? And why is that a strategic problem you're solving? Who's going to buy it? How defensible is it? You know, what investment do you need to bring that off the ground? And really, those are the three things, if you pull them together, that ultimately any venture investment investor will look at. And for me, it's probably 70% people in terms of my decision making, 15% market, and then the rest is the product. And what you find with pitch decks is it often starts with product, bit on market, and then one page at the very end with team. So we kind of have to inverse that a little bit with our own decision making.
Thank you, Stephen. That's an excellent summary of the tension between an investee company and investor, which you have to overcome ultimately to move forward. I'm going to move on to Jordan, if you don't mind. Jordan, again, tell me a little bit about Foresight Group, where it fits in terms of investing in companies, and also get an understanding of how businesses can prepare themselves or how they approach you to just give them a better shot in terms of that dialogue.
Absolutely, Lewis. So as I said at the beginning, Foresight has been in this arena, investing in SMEs in the UK for the best part of 30 years. We have a team of over 30 investment managers like myself, and we're probably one of the most active investors in the UK, doing about 20 to 30 new deals per year. And even though COVID has been challenging, we've made a number of new investments and supported our portfolio this year. Specifically, the Midlands engine, the range of investments that we're making is just below £250,000 up to £2 million. Of the 17 investments I referenced earlier, our average check size on the first investment is around £600,000 to £750,000, and we've made a number of follow-ons into our portfolio companies. So I think the idea that we try to discuss with management pre-investment is that, you know, we're not just a one investment and then done. We continue to support, and we understand that for a management to realise that the right exit sometimes can go through 2, 3, 4 or more rounds of investment. So we're in it for the long game. And then specifically in terms of how do we go about getting in touch, Foresight has a very good process in terms of following up with companies. We see, last year we saw over 1,400 business plans that were reviewed by our investment team, and each one is, you know, plugged into a CRM system. So we have to follow up, and we do that within a, you know, timely manner. And of those investments, you know, that we appraised, about just over 1% were done. So it just shows you the sheer volume that we're working on. But there are a number of ways to get in touch to begin with. You know, LinkedIn, I get a lot of companies contact me through there, but also mobile, email address, and also our website, which has a, you know, we report on how many companies approach us directly, and they're good growing numbers even through COVID. So any of those, and I'm happy to provide my details as part of this, are good ways to get in touch.
And I guess working in the marketplace, both yourself and Stephen and Georgina, you know the other investors and the other fund managers. So again, if it's not for you, there's always the opportunity to you then on refer them or suggest or make introductions to other fund managers as well.
Absolutely, and just on that, the Midlands Engine Fund, you know, while Stephen and I and Georgina might operate within different funds, the idea of co-investment is something that we're very open to. So the idea that you can have more than one fund around the table on investment is attractive to us, and we've got a number of examples in Foresight where there are other funders in that business, And that's what we actually really like, especially from the angel and high net worth market, because ultimately what that is doing is validating a proposition for us with someone who may have better expertise and sector experience, who is also writing a check alongside our cash. So that's something that we really encourage.
Thanks, Jordan. And we talked a little bit about money, which is clearly very important. But Paul mentioned right at the start that actually it's as much a partnership, and that those investors can bring other things other than the funding and the investment. Typically, how else will Foresight support a business to grow?
Yeah, so there's three things that I always talk to entrepreneurs about what Foresight brings as value, because giving up equity, isn't an easy decision to make. So, cash can't be just the only thing that an investor brings. So the other areas apart from cash that Foresight brings is one, sector expertise and a wide talent bank of non-executive directors and people who we work with on a very close basis that we would put in to a company as a chairperson or even just a non-executive director, who is able to work closely with management, who is typically someone who has been and done it a number of times before, understands the entrepreneur's pains in growing small businesses, and can also be just another dynamic to the team. And we've got a number of examples in our portfolio. For example, we've got a business that operates in the retail sector, and we put in the ex-chair of Hamleys, Moulton Brown, ex-CEO, sorry, of Moulton Brown in that business to really drive growth and aid that entrepreneur on his journey. And the final thing that we add is the ability to guide and direct when it comes to an exit. So within the deal team at Foresight, we've got a number of people from different backgrounds, but there's a lot of kind of people who've worked in lead advisory or mergers and acquisitions. So when it comes to that exit, driving value, and we've got a number of case studies where, because of Foresight, we've been able to achieve a higher exit for the founding team. I think that, so those two things outside of cash are really what I try and focus on.
And hey, as an investor, as a fund manager, as our fund manager, you want that business to succeed, don't you? Ultimately, if it succeeds, we all succeed.
Exactly. Yeah, and then I guess if there was anything that when I look at a company or when we approach new management teams, the one thing I would try and say, outside of all the other things that have been discussed this morning, such as preparing your information, which is key, I think the one thing key with equity is that this is a journey, and this is a collaboration. You are giving up a part of ownership in the business. So if the mindset is that you want that collaboration and you want that team environment with the investor, then great. But just make sure that you've asked the right questions of the investor, and make sure that you understand who it is that you're going on this journey with. Because if you get that wrong, it can be difficult. But my experience so far is that, I'm sure it's true in other organisations, not just Foresight, but more likely than not, the entrepreneurs are aware of the partner that they're working with.
Thanks, Jordan. That's really helpful guidance and support as well. Simon, I'm going to come to you. Apologies for the delay. We've heard earlier from Paul and from a number of the panelists, both in this session, but also the earlier session, of the importance of advice and guidance. So please tell me what EMW Law does and what your day job is.
Thanks, Lewis. I don't mind going last. That's okay. I mean, principally, when you're looking at, this session here, obviously we're focusing on equity investment, and typically we're going to come to the party quite late. When you've secured or you've been talking, you've found your investor and you know who you're speaking to. Part of the process in terms of getting going through an equity deal is going to be, as we've talked about, getting good advisors on board, and we can help a management team navigate the process. And I mean, whilst we're quite privileged in the sense that we see things from both sides of the fence, because we do act for private equity investors, but then actually our business right from the ground up 25 odd years ago was built on advising management teams. So we we would help navigate the business owners through the terms of the shareholders agreement and the revised articles of association that the investor is going to present, and likely that they're going to want to look at all sorts of things like revising employment contracts and all sorts. So there's that part to it. The other aspect really, I guess, is pre-deal. Quite a lot has been talked about so far on this panel discussion about, presenting things in the right way. And I think as a result of that, the sort of getting your house in order beforehand, can also often be a really important part of the process. So the sooner we can work with a business and understand what they're trying to do, often it can be the case that you want to focus on getting things tidy before people start lifting the drains and having a look at what's going on in your business, and making sure that for example, you've got robust terms and conditions with for customers, your staff handbooks and your employment contracts for your staff are sound, that you're not about to bump up against the end of a lease that for an important manufacturing facility or something that's just going to cause a problem when you then start talking to an investor who wants to partner in the business. So there's sort of two aspects to it really, I guess, Lewis, in terms of the process when it comes to doing a deal, but also getting things in good order from a legal perspective before you start engaging with people.
Thank you for that. What's important from my point of view is what's really interesting is that I know that you act for both the investee company and the investor as well. How important is it for both of those parties to be on the same track, to actually be working together from the outset? Otherwise, I'm guessing that's a relationship that's never going to work out. So how often do you come across situations, hopefully not very often, whereby they're going in different directions? And I guess it's not your role to do that, but what's your recommendation to businesses when they're looking for investors, their partners, that Paul talked about?
It's a lot's been said about this being a partnership, and I'd wholeheartedly agree with that sentiment. I think I sort of see private, and the conversation I have with the management team before they take equity investment, I think from my perspective is very much this is going to be a mindset change for you. You've got to sort of get used to the idea that there's a third party now who's going to be looking over your shoulder, wanting to understand the performance of the business on a month by month basis, and it really is a sort of, if you're not ready for that mindset change, then I think sometimes it can be a question of maybe wait until you are, because you're absolutely right. You've got to look at you're going to look at the business in a different way. You've got a third party who's now interested. You need to have robust reporting processes involved so that you can, at a touch of a button, you can present the data to your investor and they can keep them abreast of what's going on. And I think from when you sort of develop that line of thinking, it's the reason why people are talking about this being a partnership, because quite often then, I see people coming to me and saying they're talking about doing a second or a third fundraise. And actually quite often the first port of call is the investor they've already started on the journey with. And actually, if that has been a successful partnership for a year or 18 months or 2 years, then actually the likely place to go for a second round funding package is that investor. And I think that is the beauty of when this goes well, that's why it works, because it does become, as people have said, there's a talent pool that the investors have got access to. There's a network of non-exec directors, and all of that is available once if you've partnered with the right organisation.
And thank you for that. We had Mark in the loan panel, who's also an advisor on deals as an accountant. I guess one of the questions that came through, difficult question, but for a lot of startups, the affordability of good advice and guidance is a difficult one. I know this is difficult for you guys because you run a business, but any sort of advice and guidance you give to anybody that is literally looking for that first round in terms of taking advice and guidance and the cost of it, or ways in which you can get around that? Or is there no way around it? You've just got to bite the bullet and pay for that advice? I
mean, from my perspective, I know the sort of the way that the private equity industry will typically fund their transactions, that it will essentially kind of come out of the pot at completion. So, you know, I think, you know, to a large extent, the clue's in the name there. You know, when you've got so far as to actually have a deal negotiated, or at least in principle, you know, you are going to be looking for advisors to essentially get paid on completion, you know, probably. You know, that's often the direction of travel. You know, I would typically be faced with a situation where the management team probably can't afford to pay, you know, the fees just out of their pockets straight off the bat. But, you know, you just need to make sure that actually the size of the pot that you're taking in and the check that you're receiving is going to cover all of the deal costs. So getting your advisor team signed up to you know, engagement terms, that means that, you know, you've got visibility over how the whole thing's going to string together, you know, then that's key, obviously. But, you know, yeah, sometimes deals fall over and we don't get paid, you know, that there's a harsh reality to that you know, sometimes we have to accept that, but you know, it's the nature of the beast.
Thank you for that. And finally, if I may, free of charge, hopefully, a couple of good bits of advice and guidance for anybody that's starting off on looking to do the fundraise. Give us some do's and don'ts, hints and tips, good or bad.
I think probably don't be too concerned about the process that you're about to embark on. I think you know, I would say having good advisors on your team and having a good firm of lawyers involved to take you through the final stages of the transaction is going to be key to you know, is going to help with the success of it. I think, you know, I've seen a lot of investment agreements. Therefore, you're going to be able to, you know, a very early stage in the transaction, I'm going to be able to tell you whether or not something is normal for the industry, abnormal, or not, and you know, you're gonna get a sensible steer from someone like me as to whether or not you're being presented with a sensible set of documents. And I mean that in the context as well of, you know, it could be, you know, investment documents look different at different sizes of the market that you're working in. So, you know, getting someone with a bit of experience on board to help you is going to be really key. I think the other thing to it as well is I've probably heard a little bit here about you know, people concerned that you're going to lose control, and I think that's back to the sort of partnership thing. I think I would advise not, in terms of a don't, to when you're faced with the legal documents, it's not pushed too aggressively back at the investor, because I think quite often they don't know wholeheartedly what they're getting into yet. So therefore they need the provisions in the documentation to protect them. But the reality is 9 times out of 10, it is a partnership. It does develop in that way. And actually, if you can then move forward together, the documents probably won't come out of the drawer. And therefore, I think you have to try and, you know, be as pragmatic as you can be in the run up to signing your documents.
Thank you, Simon. That's really useful. I'm going to just finish the panel session before I come on to any Q&A, although thank you to the panelists who are answering those Q&As for me and doing my job. That's much appreciated. Paul, and probably Georgina as well, if you're still on the line, Georgina. Paul, very quickly, what's the future for Zyke and your other businesses, and how will you be using external finance to grow those businesses? And I guess the same question for Georgina as well, with your new business endeavours. But Paul, if you go first for us, please.
Yeah, I've been really pleased to hear all the comments from all the panel today. It's good to see that the investors obviously do recognise that it is a team effort. You're investing in the people as well as the idea. It's good to see that hopefully they see that the entrepreneur has to not be too constrained whilst keeping the investment under control, obviously, and that keeping the company agile and being able to react. On the flip side, it's also good to see some of the comments that the investors are not necessarily looking for a quick out. As I say, my strategy generally is a long-term investment with an eventual sale. Obviously, I'm happy to sell in that context eventually, but it's better to get a sensible profit and gain market share and actually have a valuable company. That's the better out rather than quick flash in the pan. So again, I'm really pleased to see the investors say that. Finding the right partner, absolutely. Someone who will work with you, will advise you, but won't constrain you, as I say. That's the main thing, because you're buying the people more than the project. That's really good. In terms of Zyke, we will be looking at some external investment. We might do some equity crowdfunding, because that's something I've done before. So there's a few options, but Zyke's looking promising, and we have the backup of the experience of the other companies to help as well.
Thank you, Paul. That's excellent. Georgina, I promised to come back to you with your own businesses. Can you tell us a little bit about them very briefly, but more importantly, how you're going to use finance to grow your business?
Yeah, so the project we're working on at the moment is in the legal tech space, which is something new for us. We're not legal professionals by trade, but it's a platform which will increase access to justice by streamlining the group litigation process. So when I say group litigation, I'm talking about cases with multiple claimants. So, you know, you could have a case with 5 people who take action against one organisation, or it could be 250,000 people. And in the UK and worldwide, it's a very difficult process at the moment. There's a lot of barriers in place, and we are looking to put tech in place which reduces those barriers for everyone involved. So we're quite early days at the minute. We were lucky enough to secure some grant funding from the Solicitors Regulation Authority. And this is probably something that's applicable to all startups, actually. When we first set out the first fundraise we aim to do for each business, we aim to include some kind of grant funding from someone who will help validate that business, whether it's Innovate UK, who can validate the tech behind it, or whether it's like the SRA, who can validate that there is a gap in the legal market for this business. And then that really helps to get the angel investors on board as well, following that up. So we did that first round back in this time last year, actually. And now, as I said, we're doing a fundraise at the moment. We are about halfway through closing that round. We're pre-launch at the minute, so it's fully, the funding is fully needed to just get the business off the ground. And then in about another 12 months' time, we will probably look to do a Series A, which will then probably put us into the realm of venture capital, which we haven't actually done before, so that'll be an interesting experience for us as well. But yeah, it's funding for us is key. If you want to grow a high growth business rapidly, then you need the funding to do it.
Thank you, Georgina. And finally, it was great to hear that the investor group is going to kick back in, albeit on a virtual basis. And I noticed this morning when I was doing my social media that actually you are currently looking, dare I say, recruiting for startup businesses to start pitching. We are, yes. We had a few, because we were going to, the last event that should have taken place was April. So we haven't had any real communication with startups for the past few months, but we're starting to see now people are coming back to the investment world a bit more from angel networks, I think, because they just realise there's no end in sight to the pandemic. There's no point waiting to start speaking to people. So yeah, I think, you know, we need to get back on that and have another event, but we do need the startups to pitch. So if there is anyone interested, please do check out the website and apply. Again, it's completely free, so you've got nothing to lose. Thank you. Thanks, Georgina. I'm going to leave it there, other than to say thank you so much to all the panelists for their time. It's been great. I've learned a lot, which is not surprising if you know me.